Today we're going to discuss the blind study and how the phenomena of oscillations can be done without looking at the price, so you are just making the right decision and you can just close your eyes and be agnostic to price fluctuations, so that illusion of movement is suppressed. Because if somebody is looking at the price, what they are trying to do is they are trying to emotionally trap you, and then on the top of this, there's an overlay framework of the marketing teams called the news networks. They are the puppets of market makers, as we know. So they are trying to induce certain actions from you. So if you don't look at the price and don't listen to the news, and then you can trade effectively. Now, that is only possible if you have a framework of oscillations you can trust. If you cannot trust that your own system, you're in trouble. So then you are just at the mercy of those merciless, opinionated, right, people in the dark. Must remember, all those people sitting in front of TV, they are there to make their millions of dollars of salary to excite you, right? They're not there to give the proper advice. Now, if you don't believe me, why don't you go and check the price projections from all the top banks and the top financial institutions? They all come with different price. UBS will say the price of Apple is 165. Okay, it should be 165, assuming that Apple is sitting at, like, say, 110. And then the other guy is going to come and say, our target is 210. They all PhDs. What went wrong? They have the same mathematics. So that's the game plan, right? So if somebody is stuck on the one side, who is going to be the suckers on the other side? Public. So what is the best way to seduce the public to do something? When there's a huge evidence over and over, these guys, they get stuck in and they get in trouble and they induce certain things on the other side, so public can bail them out. So this is a very complex game scenario, and remember, even the banks go on war with each other. If you look into the pit audio, there used to be 5,000, 6,000, 10,000 contracts are coming in the beginning and the end of the day. One bank is selling aggressively, other bank is buying aggressively within minutes. And that was the old order flow, right, for people in the pit. So that was order flow, right? So that was it. They knew it before anybody else knew it, and then they reacted on this. So the point is, either you have algos who can detect news before anybody else, and you have connections in the inside world more than anything else, and you have this army of PhDs sitting there modeling things before anybody else, right? Then you can play all those games. Footprint is after the fact. Dark pools are also after the fact, right? So there's nothing out there except for 369forecast.com, which tells you upfront the probability space in public that these models are behaving such a way, and we have more than 2 years of history doing this. But you have to take your own decision to make the trades. You have to make the connection with the brokers. Here's the fundamental thing. Nature sits on top of everybody. If you really get into the GAN world, that's what he was after. Knowing in advance, next 20, 30, 50, 100 years, what's going to happen. So he will predict things, beginning of wars, ending of wars. That is Mars and Pluto and Saturn scenarios. Jack Gillian makes $10, $20 million a year horse racing and whatever racing he does, betting on these things. He's looking at the jockey and the horse and the date of birth and the position in the race and the day, which location the race is taking place, and he will just make millions. So the point is of all this ranting is, if your model is so strong, you don't need price illusions, right? So this is it, right in front of you. There's no price. So I think you should always go back and test. If you're going into the oscillation model based trading, must trust your oscillations, because your brain has to trust it, right? This pattern, brain works in images and patterns. So do not chase the marketing gimmicks. Long-term sustainability is impossible. They have their agendas, and you may not be in their best interest at their heart. That's the whole story. So anyway, so I think this is the most valid marketing statement I can make, to trusting your models. And you can only trust your models if your research is very deep. And once the research is deep, you have to find evidence of its operations. Back testing is one thing, and then forward testing, and then real-time testing. So that is very important. So yesterday we laid out the framework of what we want to do with the oscillations, and today we said we will just do blind study, and here it is. We can go any day you want, but let's go for today. So if the oscillations, this is SPX and this is ES, very important. All right, so I'm just gonna mark it, right? And we'll see if I win or lose. So I'm saying that if I follow my oscillations, if I'm going long and short, this is my short location. I'm gonna put my location metrics first here, and then we'll open the price and see what really happened, right? So let's mark the short positions first. We don't know how far it goes, but I'm looking at the oscillations of this bigger SPX oscillations first. Now we are not getting into the wave theory and Gann theory and elite wave theory. You can ask 20 people, they draw different wave counting, right? The software is also there. This is something different. All right. So I'm thinking, okay, I got some 2 good trades to go. 1, 2, 3, 4. If I want to go long, I will probably looking at long here, right? Okay. So we don't know if it worked or not. We'll see. I'm going to qualify on the left side too. So first I am looking at the critical position. So 4 shorts areas, and I'm going to look at some maybe 2 long areas, right? Why I'm doing this? I'm looking at these oscillations as explained yesterday. I cannot see the divergence unless I see the price. Excuse me. End of the day, I don't think I want to touch it. Okay, so I think let's see. We have probably out of 6, with 80% accuracy. Let's see, 4 worked and 2 failed. Let's see what happens, right? Perfect. Now I'm gonna go at this location, and I'm gonna say I'm gonna take shorts in this time frame. So if I'm taking a short, I need this guy to be on the upper side, right? That's what we're looking for. So let's mark this. Okay, because remember, we want it to be on the upper side, both of them, on this execution chart, and we go down. Hopefully, we'll see. And this one is the next one. Okay, so let's do the same thing on the right side. So your ability to read the oscillation is what we are testing. That's all we are testing right now. Okay, ability to read the oscillations. Multi-time frame oscillations. Okay. Okay, so I think the trade started, if you're driving this from SPX, right here, okay? And then long side, let's see if the long, I'll mark it, following the rules, nothing else. Looking at two, just take a picture of it, right? That's it, two sides. This is a long area, as we talked about it, right? Side here, so I'm gonna see if they converge. Encapsulation, this is going here below below 2 as I see, right? Encapsulation is going on, so somewhere here. I'm looking at the both sides of the equation. Let's start from this one which we marked. Somewhere here, if not this one, maybe the next. This one, I think this one has a problem. I think we'll do next one right here because I want this guy to be on the other side too. Fisher on the other side, so as this one on the other side. That's the rule, right? And then we wait for this. Okay. On the right side, this one did not happen. If this happened, this one did not do it. So I think this is the only one, because remember, this on the opposite side, need to bring it down. This one brings down, this one has to come down. It came down here. Even though this is giving us the long area, but actually the trade came a little later. Well, let's see, we will check it out. We will check it out. Let's mark it. All right, so let's see how it happens. So let's bring the price on. And then let's bring this price on. Format instruments. So I was hiding this here. That's all we do. I just hide it. I go back. This is just simple. I go back years and years and years. Once I think I have found something and I'm coming with something new, right? You have to test it before you accept it. 90% of the things we produce from technical space just goes to waste. And I think 90% things which comes from the universal interactions, so they get consumed. It's shocking how it works. So anyway, let's get to our business. So on this day, the first shot, did we get something? We did not mark it. Okay, we marked it. Oh, okay. 1 second. Okay, so there it is. Wait. Apologize again. Same as instrument. I don't know what's going on. Okay, that's fine. We're not trading that thing anyways. So this one is saying, okay, shorting area is here, and then we got a short. Pullback happened here. I don't know. It pullback happened or not. I'm just taking shots here, right? So okay, well, short happened here too. I'm looking at these two conditions. So I studied the two conditions. In the direction of it is going down, the big wave is going down, so I'm wanting the short wave also to go down, go down, go down, go down. They all worked out nicely, and it should be what we call a 60-point happy camper. Get out, get out. If not, here's a short again, here's a short again, long again, short again. That's it. We're done. Actually, everything worked nicely. So that is how you have to do it, and then it becomes second nature, right? So what are we doing here? So think that way. Big wave is coming, right? Inside the big wave, you have short waves like this going on, right? When this big wave is going down, every time this guy goes down, we take it. 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 When this wave goes up, and the smaller waves are going up like this, right? So we are heading in the direction of take this, take this, take this. This is exactly what we did, and this is how you should be trading your oscillations. Thank you so much.